Now, when we are talking about factoring, the term must not get confused with that we have studied in mathematics. So, what was that factor? That 2 and 3 are the factors of 6. So, are we going to study that in this? No. The factoring that is in finance. So, for example, this company who deals in this medicine sold goods to various persons. Those persons to whom goods are sold are known as debtors in account receivable. Now, in return of these goods, the money will be received by this company. But is it that easy? There are various problems associated with this. For example, the management of debtors, the collection from debtors, might be they pay or may not pay, that is the bad debts risk. Following debtors is an important issue, and timing of payment, that is when they are going to pay the money. So there are n number of issues regarding the collection of money. So what's the solution to these number of problems? The solution is factoring. Now let's understand the process of factoring. What happens is the sale or contract, purchase order or invoicing is done as normal course of business. It is done between the company and the buyer. The factor comes into play when there is the payment. So what factor is going to do? Factor will give us the prepayment, or I must say he will pay me in advance, and then later on he will collect that payment from the debtor. So what I am not no more worried about collecting that money from the debtor. Now my tension, my management problem, my bad debts rates are transferred to this factor. So this factor acts as an agent between this company and the debtor to whom the goods is sold. But there are no free lunches in this world, and this factor, as he is making prepayment, so he will charge commission, he might charge interest on this advance payment, and it depends on the type of factoring also that we are choosing. So what is factoring? Factoring can be defined as an arrangement. Now, arrangement regarding the sale of goods to the person such that the receivables arising due to the sale of goods which is sold by this company is collected by the factor. Now there are different types of factoring. The first is the recourse factoring, the another is non-recourse factoring. This we will be discussing in detail in this video later on. The other is the advance factoring. The name suggests that the factor pays in advance. Maturity factoring, that is the payment on maturity. Disclosed factoring. Now what is the disclosed factoring? That the name of the factor who is collecting the money on our behalf is disclosed in the invoice. Undisclosed factoring, that is name is not disclosed. And one there is full factoring. So now let's discuss these two types of factoring, that is the recourse and non-recourse factoring. Now this debtors or accounts receivable, there are two cases that may be possible with them. The first one, that they may not pay the money, that is there are chances of bad debts, and the second case is that they may pay the money. So there is always a risk, uncertainty. Now what happens in factoring is when the factor, that is the person who is collecting money on our behalf, if he does not bear the risk, he does not bear the bad debts loss, he does not bear the risk, then such type of factoring is known as recourse factoring. So recourse factoring, that is factor does not take any risk in recourse. But when we talk about the non-recourse factoring, it is just the opposite. So when the factor bears the risk, that is when factor bears the risk due to bad debt losses, then it is non-recourse factoring. Now there are various advantages of factoring also, like they help in converting the credit into receivables. They can help in credit assessment. Off balance sheet, there is no additional debt that is created. There are various other facilities like account receivable reporting, sales ledger administration, and follow-up. So these are some of the few advantages of factoring. Thank you.